Before you buy a condo here in Corpus Christi or Texas in general, there are a few things that you need to know that could save you tens of thousands of dollars and a lot of frustration, from the special assessments and financing restrictions to confusing HOA rules. Buying a condo here isn't quite the same as buying a traditional home. And in this video, I'm gonna break down the most common mistakes that buyers make when purchasing a condo here in Corpus and how you can avoid them. Whether you're relocating, you're investing, or you're just looking for that low maintenance lifestyle near the coast, this video is going to give you some real clarity. And if you're new here or a returning viewer, welcome. I'm Lezli Milner, a local real estate agent here in Corpus Christi, Texas, and I create weekly videos all about buying, selling, and living here in the coastal bend. And my goal is to give you helpful, straightforward information so that way you can feel confident in your next move. If you're serious about buying a condo here in Corpus Christi, reach out to me. I work with people every week who are relocating or ready to invest, and I'll help you get clear on your options and avoid costly mistakes. My contact information is in the description below for you. So let's get into the biggest condo buying mistakes and what to look out for. To kick things off, we've got mistake number one: thinking you can renovate anything inside. One of the most common mistakes that I see is buyers assuming that they can just renovate their condo however they want, just like they would with a single family home. However, with a condo, your ownership typically stops at the paint on the walls. You may not have control over what's behind them, and that includes things like the plumbing lines, electrical systems, and even structural support. Now, here in Corpus, especially in the older buildings or beachfront properties, it's not unusual for those walls to house shared utilities or even be load-bearing. So if you're thinking about opening up the kitchen or knocking down a wall or moving the laundry room, you're gonna want to slow down and make sure that those changes are even allowed. HOAs will often require you to submit renovation plans for approval, and some may have strict limitations on what you're allowed to do within your condo. You'll also need to check whether city permits are required depending on the scope of work. And in some buildings, systems like the HVAC units or water heaters may be shared between the units or located in restricted areas like the rooftop, which means that you need permission to access them or even service them. And if there's any changes without approval, that could violate your HOA agreement or even your insurance policy, especially if something goes wrong during the work. So before you fall in love with a unit based on renovation potential, make sure you review the HOA documents so you can confirm what's possible before you go under contract. Moving on, we got mistake number two: not looking into the parking situation. While renovation limitations might be an eye-opener, another crucial detail that gets overlooked but affects your daily life just as much is parking. Now, parking might seem like a very small detail until it's not. And here in Corpus, especially near the beach or older condo buildings, parking can be limited, unassigned, or just plain inconvenient. And some condos come with only one parking spot per unit, even for 2-bedroom units. Others may not have assigned parking at all, and you'll be stuck competing for open spots. With that said, there are some complexes here in Corpus where certain units come with 2 parking spots or 1 parking spot. It really just depends on the building. That's why it's so important to ask upfront and find out exactly what is included with the unit that you're looking at. So you'll want to ask whether your space is assigned or if it's a first come first served basis. That can make a huge difference, especially in the smaller communities where the spots are limited. And if you drive a larger vehicle like an SUV or a truck, which a lot of people here do, you'll definitely want to see the parking space in person. You may even want to consider asking the office what type of vehicles are in the neighboring spaces if you have assigned parking. If you check it out at a time where nobody is there, you may come home to find out you gotta park in between two big vehicles that straddle the line, and that's not fun. Also, some older buildings still have compact spaces that just don't work for modern vehicles. It's worth checking if the spot is covered or even in a garage, or if it's located far from your actual unit. If you're going to be lugging groceries or beach gear, having to walk across a large lot or up several flights of stairs can get old pretty fast. And don't forget about guest parking. Some buildings have designated visitor spots, while others may have limit overnight parking or not allow guests to park on site at all. That's something to clarify up front if you plan on having visitors regularly. Lastly, parking may not always be included in the sales price, and in some communities, spots are deeded separately or come with an additional monthly fee. So make sure to ask if the unit includes a parking space, where it's located, and whether or not there's any extra cost tied to it. It is one of those things that buyers tend to overlook until after they've moved in. Mistake number 3 is a big deal: ignoring the owner-occupancy rate. It's something that a lot of buyers don't even think about. The owner-occupancy rate refers to how many units in the building are actually lived in by the owners versus being used as rentals, either short-term or long-term. So why does this matter? Well, first off, if you're financing your condo, most lenders look very closely at this number. Once the owner-occupancy rate drops below 50%, it becomes much harder to get approved for a mortgage, especially if you're using FHA, VA, or even some conventional loans. That's because lenders see buildings with a high number of renters as a bigger risk, since the long-term stability of the community can be more unpredictable. Also, it's important to note that even if you're paying cash or you're not worried about the financing, this still matters. A lower owner occupancy rate can affect everything from resale value to how enjoyable it is to actually live there. With the short-term renters coming and going, you might notice more noise, more parties, or even common areas that aren't as well maintained. Renters tend to not treat the space the same way an owner would. So over time, that kind of environment can wear on you, especially if you're planning to live there full time or you have younger kids. On the flip side, buildings with a higher percentage of owner occupants usually have a stronger sense of community. They're better maintained, the rules are more consistently followed, and the overall vibe is just more settled and respectful. So whether you're getting financing or not, please do not skip this step. Ask your agent or the HOA about the owner occupancy rate and really get a feel for who actually lives in the building. It can tell you a lot about what to expect both financially and lifestyle wise. Look, I know at this point you're probably thinking, dang, this is a lot to worry about and just seems so stressful. And you'd be right, it is time consuming and stressful, but it will make a world of a difference on the overall outcome of your purchase. So I'll put my contact information in the pinned comment of this video, and for those who are serious about purchasing a condo, reach out to me and I'll gladly have a conversation with you about what it'd be like to work together. Now, moving on to mistake number 4, not asking about special assessments. This ties right back into finances, and it's a cost that catches a lot of buyers off guard. Special assessments are a big deal, and if you're not asking about them up front, they could end up costing you thousands of dollars down the line. A special assessment is basically a one-time fee that condo owners are required to pay when there's a major repair or unexpected expense that the regular HOA dues and reserve funds can't cover. Things like a roof replacement, foundation repairs, storm damage, elevator upgrades, or even plumbing issues. Those costs can add up fast. And if the building does not have enough money set aside, the HOA is going to turn to the owners to make up the difference. And that means each owner is responsible for paying a portion of that cost based on the size or value of their unit. So if you're in a one-bedroom unit, your fee might be a little lower, while other owners of larger units could pay significantly more. In Corpus, since we are on the coast and weather is a real factor here, some buildings may face more frequent or expensive repairs, especially older ones or those that haven't kept up with long-term maintenance. And if the HOA isn't well managed or the reserves are underfunded, a special assessment can pop out of nowhere. So how do you protect yourself? Well, first, always ask upfront if there are any current or upcoming special assessments. Have your agent contact the HOA or property management directly. You should also review the resale certificate and the HOA meeting minutes when you're under contract. That's where you'll usually find mentions of planned repairs or discussions about future fees. Sometimes assessments can be paid as a lump sum, or they may be broken up into monthly payments added on top of your normal HOA dues. Either way, it's not something that you want to be surprised by after you closed on the property. If you've got an incompetent agent who misses this step, you'll be the one stuck footing the bill. This is exactly why it matters to have someone who knows what questions to ask and where to dig, because once you close, there is no turning back. So next up is mistake number 5. Skimming over the pet policy. This one catches more buyers off guard than you would expect, especially if you have pets or you plan to get 1 or 2 in the future. Every condo community has its own pet policy, and some are a lot stricter than others. Some buildings here in Corpus may allow pets with size or breed restrictions, while others might have a limit on how many animals you can have, or not allow them at all. I've seen communities here where only owners can have pets, but renters can't. And while it's not super uncommon, but there are still a few buildings around town that are entirely pet-free. Even in a pet-friendly building, many HOAs will have specific rules like breed restrictions or weight limits, especially when it comes to larger dogs. So if you've got a big dog or a breed that's often flagged, make sure you double check those details early on. You also want to ask about the fees. Now, some HOAs will charge a pet deposit, a one-time non-refundable pet fee, or even monthly pet rent. These costs aren't always advertised up front, so it is worth asking to avoid any surprises. Noise can also be an issue in close living quarters. Nobody wants to live next to someone who has a pet that's excessively loud. And if you've got a pet disturbing neighbors, some communities will find you after repeated complaints. So that is something else to be aware of. And while emotional support animals and service animals are protected under different guidelines, you'll still likely need to provide documentation and go through an approval process with the HOA. The bottom line is, don't wait until you're under contract to find out that your furry friend isn't allowed to join you. The last thing you want to do is to fall in love with a condo and realize that it's not a fit for your whole household. Up next, mistake number 6. Not understanding the financing requirements. And this is a big one, especially for first-time condo buyers. Financing a condo isn't the same as financing a traditional single-family home. And it's one of those areas that catches people off guard all the time. Not every condo qualifies for every type of loan. If you're planning to use FHA or VA loan, the entire condo project has to be approved, not just that individual unit. And that's where things can get tricky, especially because not every building in Corpus is on those approved lists. Even with conventional loans, some lenders have tighter requirements depending on the building, and if there's a higher number of renters, low reserve funds, or any kind of litigation involving the HOA, lenders may require a bigger down payment or even deny financing altogether. And that's because the building might be considered non-warrantable, which basically means it doesn't meet standard lending guidelines and could be seen as higher risk. And when that happens, your financing options may become limited, or the requirements could change, like needing more money down or a higher credit score. A good example of this is Villa de Sol on North Beach. The HOA recently just hit owners with a $2,500 special assessment, which really shook things up for both current owners and potential buyers. And when things like that happen, whether it's the surprise fees, high renter ratios, or low reserves, it can affect not only your financing options, but also the building's overall marketability. If you want more details on what's happening at Villa de Sol and why so many units are sitting on the market right now, I actually made a full video all about it, and you can go check that one out after this video. I'll have it linked in the description below for you. I also spoke with the local lender that I work with who specializes in condo loans here in Corpus, and they mentioned in most cases buyers can expect to put down 10%, and you'll typically need at least a 640 credit score to qualify. Now, most of the time, the condo also needs to be used as a primary or secondary residence, so that is something to keep in mind as you narrow down your options. Now, if you're planning to pay cash, this might not be a concern at all, but it is still important to think about resale value. If a building has financing challenges, it could limit your pool of future buyers, which can make the property hard to sell later on. That's why I always recommend looping in a lender early, especially one who is familiar with the Corpus condo market. They can run a quick check to see if a building is financeable with your loan type and help you avoid wasting time on properties that aren't a fit for you. And if you're seriously thinking about buying a condo here, reach out to me. I can connect you with the right lender and go over all your options to make sure that you're on the right track from day one. And finally, rounding out the list, mistake number 7, not breaking down the condo fees. This is one that does catch a lot of buyers off guard when they first start looking. Monthly HOA or condo fees can seem high at a first glance, and if you don't really take the time to understand what's actually included, it's easy to get the wrong idea. A lot of buyers get shocked when they see a $500 or $600 monthly fee. But instead of focusing just on that number, you really need to look at what it actually covers. In Corpus, some HOA fees include things like water, sewer, trash pickup, cable, internet, insurance, and even maintenance for the shared amenities like pools and elevators or fitness centers. With that said, most of the time your electricity and your property taxes are not included in this fee. So make sure to factor those into your monthly budget separately. So while one property might have a higher monthly fee, it could be because you're getting more value or the building has stronger financials. On the other hand, a lower fee might seem attractive up front, but it could also mean fewer services or that the building doesn't have enough in reserves, which increases the risk of special assessments down the line. It's also a good idea to ask about the history of fee increases. HOA fees can go up over time, especially if the insurance premiums rise or the building needs unexpected repairs or upgrades. Knowing whether fees have gone up in recent years can really give you some insight into how the building is managed. And when you're looking at different condos, pay attention to how the property actually looks. If the fees seem unusually low, but the building looks neglected or maintenance is being ignored, then that is a red flag. It could be a sign that the HOA isn't budgeting properly or that the reserve fund is underfunded. Also, keep in mind that your mortgage and your condo fee are two separate payments, and they're usually paid to different entities. A lot of first-time condo buyers don't realize that, so it's something to keep in mind when you're calculating your total monthly cost. And at the end of the day, it's not just about the dollar amount. It's about the value you get. So make sure you understand what's included, how well the HOA is managing the property, and whether or not the reserves are in good shape. That fee can tell you a lot more than just what you're paying. It gives you a snapshot of the building's financial health. Now, I know I said the last one wrapped up the list, but I have a bonus mistake that is pretty crucial if you're even thinking about using your condo as a rental. Whether it's part-time, short-term, or a full investment strategy, this is something that you really don't want to skip over, and a lot of buyers assume that they can just automatically list the property on Airbnb or Vrbo, but that is not always the case. The truth is, a lot of condos and townhomes here in Corpus are used for short-term rentals, especially in the areas closer to the beach or near the popular attractions, but that doesn't mean every complex allows it. And some buildings have very specific rental restrictions, like requiring a minimum lease term, limiting how many units in the complex can be rented at once, or just banning short-term rentals altogether. Even if the HOA allows rentals, you still have to follow city guidelines, and the city of Corpus has zoning regulations and permitting requirements for short-term rentals depending on where the property is located. So if part of your plan is to rent out the condo when you're not there, especially for short stays, make sure to review the condo's rental policy early in the process and ask about any lease minimums, caps on rental units, application processes, or HOA fees related to leasing. And don't forget to check the city rules as well. It's definitely possible to find condos here that work well as vacation rentals or part-time income properties, but the key is to do your homework first so there is no surprises after closing. So those are the biggest mistakes that I see buyers make when purchasing a condo here in Corpus Christi. And now that you know how to avoid them, if you're serious about buying or investing in a condo and you want a clear plan, reach out to me. I work with people every week who are relocating or looking to make a smart move, and I can help you find the right property and connect you with a lender who actually understands this market. Also, make sure to hit that subscribe button below, give this video a like, and tap that little notification bell so that way you don't miss out on any of the weekly content that I put out about the area. Again, thanks for watching, and I'll see you in the next one.